The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome, everybody, to another excellent edition of the Power Trading Hour with me, your humble, lovable, and what else? Cuddly soft. We always like to come to you at this time.
The following takes place between 2 p.m. and 3 p.m.
At this moment, we're off 56 points on the S&P cash. The Dow's off 577. The Nasdaq's off 143. So are we coming down on volume today? So we'll go right to the CBOE equities at market volume summary. We had about, 6.8 billion shares yesterday with an hour and, 54 minutes left. We have half that volume. So maybe this changes before the end of the day, but my guess is we're going to come up with even lighter volume than we saw on yesterday on the way up. And I still think we're going to kind of just bounce around here. Might see some up and down through Wednesday, which starts the options expiration cycle, but it still looks like we're going to make our way up to about 2,700, maybe a little over that, by a week from that Friday, the 20th. So we got a lot of time going here. I'm not looking for the market to go back up to the moon. Certainly not thinking that the market's going to break and the wheels are going to fall off. But what we have, if you can look at the futures liquidity, and every day it continues to get worse. There just aren't a lot of people willing to get in to this fray and get mowed down by computers on a daily basis. If you're an intraday trader, you can make some money on that. But they just continue pushing the market down as hard as they can, up as hard as they can, and there isn't just a lot of orders sitting there, either in the equities or in the futures themselves. And that's about it. We've got a very thin markets. And, whether it's the move up, big move up last couple of days, or the move down today, there just isn't a lot of volume. There's just slightly, I wouldn't even say slightly, there's more volume on the way up, at least for the last few days, than there was volume on the way down. We'll look at this at the end of the show, but like I said, 3.6 billion shares right now. And you were looking at about 6.5 billion, I think, yesterday. I have to look at that again. Anyway, you can give me a call at 877-927-6648. You can email me at path@tfnn.com. And, of course, you can always post a message in the den. So I want to go back to a week ago Friday. I think it was a week ago Friday, maybe Thursday. I talked about the rule of alternation, and that is if a market goes straight down, then you should expect its move back up to be rather complicated. I think we could say that in the least we've seen that so far. We haven't gone back to previous lows yet. I'll check just to make sure. You never know in this market. But if we were to continue on lower volume here, maybe see a rally of, back to 2620 on the S&P cash by the end of the day, I think that would be another pretty good indication that we're beating out this bottom that I think is going to go on for a little while. Rally into options expiration. Then we're going to see what we actually have for the market. Now, starting next Thursday, we start getting our first round of earnings. A lot of people could say that we're starting the earnings season now with some banks. I think those earnings are all going to be good. So the question is, why is everybody going to be sour and dour? And that has to be for the forecast forward. Markets don't like uncertainty, and probably we'll see a tepid market going forward until we get through these trade issues. But everybody's just very nervous, kind of like when anybody comes in and says boo, and the wife kind of shivers over in the corner. And you think, man, maybe there's a little bit of wife beating going on in here. That's kind of what I see. A lot of people just really nervous at any kind of discussion. Powell's, I think, continuing to talk right now at the Chicago something or other. What is it? Chamber of people that are never right. Economists. I think that's what it is. So we'll keep an eye on that. But, we don't really need to go much higher to have a very good and bullish signal at the close today. One thing we don't have is volume to the downside. And I guess another thing I brought up a little while ago was the incredibly light volume that is now coming in to the NYSE, and maybe they've reached a tipping point. I would say on any day that I had 1.5 billion shares just a month, maybe even 6 weeks ago, on the NYSE consolidated tape, I would say that we were getting ready for another 100-point move higher on the S&P cash. That has continually been lower and lower each day, and I think it is a trend that the electronically traded stuff is reached a tipping point where that floor traded stuff, it's always been going down, but it took a major step down in the last 5-6 weeks. But only 1.5 billion shares on the NYSE traded floor stock. If you were to go back and just compare apples to apples for just 6 months ago, you would say that the biggest rally of all time is coming. But if you look at total volume, or you just look at the volume in the small caps, or you just look at the volume or the total dollar amount, you can't really think that this market's really winding up. We're playing around about half the dollar volume that we saw around February 6th through 9th. So I'm not going to get real worried unless I start seeing volume come in. I've got a handful of stocks, both short-term and long-term. They're all fine right now. There's nothing out here that looks scary other than the market itself, getting some retests on lighter volume today on them. So I'm going to continue sitting on my hands. My guess is it will be incredibly hard to go long when the time does present itself. You can give me a call, like I said, at 877-927-6648. Email me at path@tfnn.com. And, of course, always put a message in the den. We'll get to history and news a little bit sooner. But, I had a few emails today, and they were asking me about Apple and whether or not their problems lie with China. I'm just wondering if anybody in the world would decide to start building stuff in China if they cut Apple off to us ever. That's pretty much the nuclear option for China. If they said, hey, we're not going to let you build your iPhones here anymore. Apple already started building facilities in India. But would you ever build anything ever again? I don't think so. Anyway, down 2% on Apple today, down $3.37, $169.43. We'll be back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And what do we have here? S&P at 2609, closed back above 2618. I'm going to say 2620. On lighter volume before the end of the day would be a great test of this area that we saw many times over the last week. And volume still not coming in. We wanted about 6.5 billion shares on the way down just to match what we had on the way up. We've got 3.7 billion shares on the CBOE equities market volume. So some are a little weaker, some are a little stronger, but it looks to me like a lot of sector rotation. Don't have any evidence of anything else to the fact. Got a lot of people out talking today, which is probably the worst thing for the market if everybody just shut up. We look at it. The question now is on this trade issue, how many days have to go through before something else catches the attentions of traders? And we shall see. Anyway, earnings start a Thursday, and mostly the banks, but we start getting into the earnings cycle once again. As always, we like to start the show off with a little history.
Then it's all just a little bit of history repeating.
On this day in 1968, 2001, A Space Odyssey opens. It's produced and directed by Stanley Kubrick. And yeah, I really didn't think about it till this morning, but 1968, it's a year, more than a year before we actually even set foot on the moon. But what a great story, because it brings up just about everything that we're talking about today. A computer that maybe not do exactly what we think it should do. That's always a little bit worrisome
Affirmative, Dave.
I know. That's the way it goes. So you just you wonder about, AI in the near future. You wonder about space technology, just about everything we talk about now. The thing is, though, within 2 years or 3 years of this movie, man, our desire to really go to the moon almost ignored. We've had some big moves, the space station, the space shuttle. But man, I'm kind of disappointed, I have to say. 2001, we were supposed to have all kinds of neat stuff. As far as I'm concerned, I've been ripped off by the promise of the future.
The 9000 series is the most reliable computer ever made. No 9000 computer has ever made a mistake or distorted information. We are all, by any practical definition of the words, foolproof and incapable of error.
Well, I don't think so. And they certainly aren't making good predictions. 2001, I was expecting to have my hovercraft ready to go, taking trips to Mars for the summer. I didn't get any of that. Well, what can you say? Let's go to some other stuff. I think that's about it. I've got some big stuff that I'm going to be talking about with Tom O'Brien in the next hour. I think you want to hang on to it. I'm going to be talking about optical computing, which I think is the next big thing. Some big changes in the last, I'm going to say, 2-3 months that are really making this a possibility in the extremely near future. So we'll be talking about that. Make sure and hang in. Always, I probably get more emails about that segment than anything we do all week. But we'll continue on. My slate is not posted. I guess it came back off. It was on. I don't know about this thing. Let's try it again here. Yeah, should be. No. Why is it not doing that? Oh, because it's gone goofy again. Here we go. Now we should be seeing it. Is it going now? I think it looks good. Should be looking good. Occasionally this HotCom thing resets itself. Yep. Okay, thanks. Okay, so we'll be talking about optical computing. And I think it will. We'll be seeing. In fact, we're already seeing products now. I'll talk a little bit about that, and then mass adoption maybe within 5 years. The way things are setting up, and catch that in the next at the bottom of the next hour. Okay, let's start looking at some charts out here and seeing if we can't see any kind of big movement in volume in these individual stocks. Yesterday, I said I was very disappointed to see a lot of phone calls about Micron. Anytime it seems like you get a lot of phone calls about gold and everybody wanting to buy it, it probably goes lower. To see everybody calling about Micron yesterday made me very nervous. I think I got in total some 10 different emails before the show, before I even started talking about it, buying Micron. And I said, well, I continue to think that this could get down to 47. It certainly got there today. But if you were actually looking at these semis, my guess is that these are going to have to consolidate a little at these levels. Volume's a little bit better than you would think with Micron. We talked about the reasons in that yesterday, and my opinion has not changed. No one likes them throwing lots of money at lower margin products when a lot of new higher margin products out on the road and coming down the pike. But anyway, a fairly nice pullback here into the support area now. That's right around this high 46s, low 47s. You got 47.26. Volume's okay. Is it that exciting? No. I just don't see a whole lot in this SMH, and you're going to need some consolidation. Everybody is betting on these U bottoms. The V bottoms, and I've been talking about U bottoms. Now, you had in the SMHs 9 million shares on the 4th. That's compared to just 3.7 million shares now. So, like I said, we're getting into some fairly decent support area. But my guess is we're going to see a couple of days where everything bounces up and down. On Tuesday and maybe early Wednesday, we have Facebook going to get grilled by congressional people. That's going to make that kind of hard to move. If we're really looking for the move into expiration, I think it starts Wednesday. We've got once we get Facebook out of the way, we've got those banks. They should probably do fairly good on Thursday. And then we got a handful of more stocks coming out on Friday and through that next week. And I've looked through them, and are they going to blow out? Probably not. Are they going to be good? Yes. Are forward-looking statements going to look pretty good? Yes. So if you're going to get pretty bummed out, it's not going to be because I think of those things. It's going to be of a general bigger malaise that people are out here. Anyway, 2603 on the S&P cash. Keep a close eye on that through the day. Oh, anyway, we're going to break. We're going to come back. We're going to start looking at how some of these stocks have done in the pullback today.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're going to take a look at Snap. Give me just a second here because I want to look at a couple of things. Got a question in the den about whether or not someone want to add to a position in Snap. You basically broke out with lots of volume on the 7th of February, 231 million shares. Got into that gap up with 20 million shares. You're down today on 8.7 million shares. Not a lot going on. You pretty regularly have a fourth of the volume every day is shorted. Doesn't mean the people went home short, but you got a lot of people intraday pounding on this every day. So the real question is, what does the overall days to cover look like? And that's about 4 days on Snap. I think you're close. I would probably not. I don't know. If we close above, let's take a look at this. If we close above 26.18 on the S&P cash, I would take it today. If we don't, I would look at it first thing Monday morning. It looks good. You got fairly low risk. You got very good risk reward. Anything below 13.15 tells you it's time to get out. One of the things I would have loved to see on this test was a move back below that 13.15 on January 20th. You don't have a lot of volume. You've got the climb up, but if we get this market moving up at all, there are 5 days to cover in this thing is a huge deal. It may even be larger than that. That's the last one. That was the last report, which is 2 weeks ago. And like I said, since then, we continue to see, I'll show it to you here. We can descend. Let me just go back through what we have on Snap. Yesterday, almost 29%, 26% the day before, 25% the day before, 21% the day before, 20%. I mean, we've had a lot of people piling in shorts on this side. So I like that part, especially looking at the Facebook news on Wednesday, where these guys are going to get pummeled. The thought is that people will look at other kinds of social media companies like Twitter and Snap. Now, Snap is probably better than Twitter, because Twitter is probably in a bunch of ETFs and people have all packaged it up. Snap is not. That means that when they're selling Facebook, they're selling Twitter. So both of those may be under AIM, where Snap hasn't been around long enough to be stuck in a lot of these things. And I think we'll probably have a much better ability to go higher. Any kind of pop with that huge short interest, too, means that you might get a fairly good run on this thing like you did before. I don't know when earnings are. When is earnings on this? Give me just a second. Is that one? That one? I got too many things on my screen here. Let's take a look at, okay, got that. And we want to look at Snap, SNAP. Okay, May 1st. Okay, you know what? This is a pretty good setup, because this thing's probably going to rally into earnings, I suspect, this year. So, yeah, I think, I think if this thing acts correctly going into Wednesday and does start moving a little bit better, then you're going to run probably at least have a good support level all the way into May. So this one's lining up very nicely. Now everybody could decide to throw the baby out with the bathwater, but other than kind of a general malaise in the market today, it's down on 8.7 million shares. It was down on 17 million shares yesterday, and you're going into a 20 million share day up from the day before. So, man, yep, I'd be looking at the very last minute of this day. We're now at 2,600 on the S&P cash, so we may not get that close above it, above 26.18. But any move back above that 26.18, and I think you'd have a kind of a green flag. Okay, what else do we have? Okay, let's take a look at some other stuff out here going on. Got somebody wants me to look at SCYBR. CYBR. So take a quick look at that. CyberArk software. I think we talked about this a week ago, maybe when this thing was hitting into this gap before. This is probably the best sector in technology right now. Not a day goes by that you don't hear about something about somebody being hacked. This gap down on the 12th of May in 2017, got back in it. That gap down was on huge volume of 5.6 million shares. Got into it with 670,000 shares on March 14th. Got into it with a little lighter volume in 440,000 shares. My guess is that this thing needs to really eat through this $54 level. And, you know, do you get another retest of $48.60? I don't think so. I think this is somewhere between 50 and 51 bucks, maybe 51.50 is where you're looking at. Well, is that right? 51. Where are we at here today? Okay, 50.80. What is that? I'd say 50 bucks. If you see 50 bucks on this and the volume remains as light as it is, let's zoom into that so you can actually see. But 440,000 shares on the way up, 116,000 shares on the way down. So again, like I said, there's not a lot of volume in a lot of stocks. There's a lot of volume in big name stocks that people continue to try to get out of, but it continues to be problematic to see some of these other stocks holding up fairly well through the day. Okay, what else do we have here on my list of people in? We'll go through these. Someone wants to look at a Vago, AVGO. Again, you can email me at path@tfnn.com. Okay. Vago Technologies, it did test its previous low on lighter volume, February 6, 224.90. And that was on 7.7 million shares. But again, if you come down on more energy off like you did on this one on March 13th, you're more than likely to go into some level of consolidation. So yes, I like that you only have 1.6 million shares compared to the 5.3 million shares just a handful of days ago as it tested that previous low. Yeah, this may be a setup. May take a little while, may take a Wednesday to get this to consolidate out, or maybe even longer. But again, I'm not a big fan of buying stocks that came down on every year. Energy, I do like this very light volume lows in here, though. These do look fairly light. Let's take a look at Qualcomm. Oh, we'll have to do that when we come back. Give me a call, 877-927-6663.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks. Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petro Currencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Well, during the break, we ran through some of those stops just under 2,600 on the S&P cash. So we'll see what happens now. Volume a little bit better, but still not that much. 4.1 billion shares on the total market volume. And like I said, if you were looking for this to be a blowout, you'd probably be looking at about 6.5 billion shares right now. But you'd want at least 6.5 billion shares by the end of the day to match what we had on the upside yesterday. So far, at best, I think we could tie. At worst, it may come up short. So Monday, Tuesday, probably going to be much more important days. Question is, how long is everybody going to hang on to tariffs and make that their mantra? But kind of a tale of two cities, whether or not you'd be involved in those tariffs and whether or not you would not. I'm in a lot of equities. I've got one ETF, and they're all doing fine. Not going to worry about it here. Nothing that makes me think that I'm going to get anywhere close to a stop today. So, but that's it. But probably the one thing that really does keep me going here is the incredibly light liquidity. I continue to show this from time to time. It's NANEX's, that's NANEX's liquidity futures gauge. And, we had been getting up to back around the third world level, which is not that good. We were pretty much before the 1st of February up around this first world level of liquidity, and it's just kind of gone away a great deal and gone into very thin markets. As you said, back in February, the overall volume for those days was around 12 billion shares in the total market, and we're fighting for 6.5 billion now. So as we get back into those levels, the volume is just dried up. Doesn't mean you can't go lower. Just means that 80% of the time you don't go lower, but we'll keep an eye on that. Do I have some more emails here? Yeah. Okay, got anything else? Yep. Got a couple of people out here. Let's take a look at a few more stocks. In fact, let's start looking at some of the stuff that I was looking at this week. We were talking about it, see if these things are still holding up. Let's go back to the second here. In a lot of these stocks, BZH, which is Beazer Homes. Lennar had that good day. Let's see what's what it's doing. Okay, so up on 863,000 shares yesterday. So far down on half that, 367,000 shares. So a pretty good day for those. Let's take a good look. In fact, these housing stock patterns look pretty good. I think we were talking about that pre-Lennar earnings. They were pretty good. Now, Lennar had two nice days. It's pulling back a little bit today, but up on 18.5 million shares the day before. Yesterday, 7 million shares. Today, down on 4 million shares. So it looks like this is going to come down a bit on probably lighter volume. Let's look at Cirrus Logic. This thing had been trying to bust through this previous February 6th low at 39.51 with 7.5 million shares. You had 1.2 million shares on the 4th. Yesterday, you went up with 850,000 shares. Now you got a doji out here with this 700,000 shares. Again, probably not the best looking chart that I've been out here, but doesn't look that horrible. To Carlisle companies. Now, this one is blowing through its lows. So that's a good indication. Although you're not getting the volume you got on February 9th when this spiked down on 2.3 million shares, you only have 800,000 shares. Let's get the profile on this one and take a look at it. Okay. Just hovering under that 2,600 level on the S&P cash. Carlisle Companies operates as a diversified manufacturing company, construction materials segment, insulation, thermoplastic, ethylene, propylene. If it's a lean, they sell it. Fastener, sealing tapes, coating, waterproof products, rigid foam insulation. Anyway, busting through this previous low on about half the volume it needs. A close back above $100.50 would put that in the trading range. I think there are better, faster horses, but doesn't look too bad. Here's a pharma CYTK. This thing hit 7.4 million shares and $7 on November 21st. Got underneath it by a quarter on April 3rd with just 236,000 shares. Back above with 300,000 shares. A little pullback today on just 95,000 shares. So there's, like I said, a lot of these stocks not hitting down here with a monster volume. Diplomat Pharmacy, DPLO, gapped up on the 11th of December last year. Did so on 1.1 million shares. Tried to test it with 800,000 shares on March 1st. Got into it with 700,000 shares on the 4th. Yesterday, up on 420,000 shares. Today, just down on 286,000 so far. So that looks like that one's going to come in on lighter volume. Let's take a look at Fitbit. Fitbit continues to kind of auger back in. This one actually bounced back into its trading range after it broke through the February 27th low at 467 with 38 million shares on just 15 million shares on April 2nd. Went up on the 4th with 4.8 million shares. Yesterday up on 3 million shares. Today down on 2 million shares so far. So that looks like that's continuing to tell a story. What else do we have out here? Great Plains Renewable Energy. Nice one on light volume, almost half of the February 6th low, $15.80. You had 1.3 million shares, tested it with 760,000 shares, went below it, closed back above it, and this is down on 163,000 shares today. So again, I'm more focused on individual stocks than I am on anything else. 25.95 on the S&P cash. So keep an eye on that. Okay. Garmin, that's just kind of hanging out. I don't see a lot in that. GSS, Golden Star Resources. Well, this one's broke below, and that's it. Nothing much to happen that. Wanted to look at Haynes again. Haynes Celestial Group. This is the tea company. This one's kind of interesting. $31.01 on June 23rd of 2017. 7.8 million shares, getting into it with just 2 million shares and just kind of going sideways. energy was a little bit more than I would like on the way down, but man, that test of 31 bucks is light. Maybe some of these retail stocks, and maybe tea is coming back. You never know. Let's take a look at some other stocks here. We almost out of time. We'll be back and look at a few. You still have plenty of time to give me a call at 877-927-6648. Email me at path@tfnn.com. This message in the den. Look forward to me at the bottom of the hour, Tom O'Brien. Next hour on most TFNN.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
There are 5 reasons traders and investors fail to spot bear markets. It's a set of 5 very specific patterns that have preceded every bear market during the last 130 years. I'm Steve Rhodes, author of Mastering Probability and the #1 market timer in the nation as ranked by Timer Digest for the S&P 500 for the last 3, 6, and 12 months. You see, timing is everything. And on Wednesday, April 11th at 5 p.m., I'm going to share with subscribers exactly how to time the next bear market. Look, the last 3 bears averaged a decline of 49%, which means you've got to earn 82% just to make your money back. Wouldn't it be easier to avoid the next bear market altogether? Sure, countless experts tell you that markets can't be timed, but what they're really saying is that they can't time the markets. So let me teach you how. Sign up for Mastering Probability by coming to the homepage of TFNN.com to begin your 30-day money-back guarantee trial membership and learn the exact tools that I use to time the markets. And if you can't attend live, don't worry, because the workshop will be archived on your members page for the next 30 days. Don't let that next bear market eat your porridge. Sign up today.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Okay, as we come back, what are we at here? 25.95.51. Like I said, you don't need much of a bounce out here. The volume continues to remain fairly mundane. Just 4.3 billion shares with 1 hour left. That means you need to get somewhere around, 2 to 2.5 billion shares in the last hour on a Friday. I don't think you're going to get that. And I think, again, if you're looking at the indexes, they may be telling you one story, but I think the equities are telling me another story, and that's basically what I'm in. So I got an email from Ralph, and Ralph did not say where he was from, so he's from Lutz, Florida. What we have in the GDX, and what am I call on this? And this is one that I've wanted to stay back from for a while, but I think you're getting ready for a big move out here. One of the things that I like to do for charts that are in triangle programs is nothing. I want to stay out, and I don't want to wait and fade the first big move out of these triangles. You only have like a couple of days left in the GDX before this thing is probably going to take a big move one way or the other. And generally, the idea is to stand back and not anticipate, but react to the move. Normally, you're going to get a couple of 2 or 3 days out of these triangle patterns. On the opposite side, you get the head fake. So if I was wanting to be bullish, the absolute best thing that I would want out of this is 2 or 3 or 4 days lower, not have any volume, and maybe buy some calls or something on these. And if you do, maybe you get a nice pullback into these. But generally, when these things fail, they fail about 80% on the wrong side, whether it's higher or lower. So I'm thinking just in a handful of days, you're going to get a fairly decent answer for these gold miners. In the meantime, sell when you can, not when you have to. We will see you here Monday. Same bat channel, same bat time. See you at the bottom of the next hour with Tom O'Brien.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.